Hello guys, welcome to my channel All Weather Market. In this video, we're going to talk about three penny stocks which can give multi-bagger returns in the future. So do watch the video till the end. But before we discuss our companies, here is a word of caution. Penny stock by their inherent nature are very low priced. They give you very high reward, that is multi-bagger returns if they are successful in the future, but they also carry a lot of inherent risk. They are also constrained in their liquidity. They have a very narrow range in which they operate, and most of them are highly subject to the operations of the operators. So you should only invest in penny stocks if you have surplus money. Our first penny stock is a company called as Syncom Formulations, and out of the three, it has the strongest fundamentals. If you want to understand how to do fundamental analysis of a company in just 5 minutes, please check out a video I made on this subject. The link is in the description. So this company is Syncom Formulations, as you can read here, is engaged in the manufacture and markets more than 200 pharmaceutical formulations products in various dosages such like tablets, capsules, liquids, oral, liquid vials, etc. So this company belongs to the pharma sector. The current price of the company is 5.95 rupees. The stock has a P currently of 14.9, where the industry P of the pharma sector is 24. So it is undervalued right now. It has a very good return on capital employed of 20%, but it also carries a debt of 62 crore rupees. Now let us look at some of its financials. The company, since September 2020, more than doubled its sales, as you can see here. In December 2020, 85 crores, which was also on the higher side. And on the recent quarter, the sales have declined. On the net profit front, you can see September 2020, around 9.5 crore profit. The company gave its best quarter in December 2020 when it had 10 crore profit. And in the latest quarter, it gave around 5.5 crore profit. So it is a profitable company, which is very hard to find in companies trading at this price. If you look at the profit and loss statement yearly, in March 2021, it had its best year where it gave net profit of 29 crore rupees, which is very good. Now, if you look at the balance sheet, the reserves of the companies are also rising. It did fall in 2014, then it picked up, and right now it has a very healthy reserves of 109 crore rupees. Also, the borrowings were on the lower side always, but the company took on a debt of around 60 crore rupees in the latest financial year. Now, if you look at the shareholding pattern, the promoters of the company increased their share, even though it was marginal, but it is a very good sign that the promoters are showing promise in their company. So right now, in the June quarter, the promoters have a shareholding percentage of 41%, which is decent. Now, the second penny stock is based upon the potential of the sector to which the company belongs. The name of the company is PIL Italica Lifestyle Limited. Molded plastic furniture industry is poised to grow at a rate of 15% over the next 5 years. And the industry is also dominated, as you can see here, by a handful of players, such as chief among them being Supreme Industries and Nilkamal. Hence, there is also room for other smaller players to grow. Here is one news item about the company which is of great interest to us. So it says that the company was awarded Icons 2020-21 award by the Times Group. Now this award is given if the company is undertaking a lot of innovation. So the company is focusing on innovation, which is one of the best tools for a small cap to challenge the bigger players. Now let us look at the financial of the company. Now if you look at the quarterly profit and loss statement, in the latest quarter, it had a net profit of 1 crore rupees. And the quarter before that, 1.15 crores. Then before that, it was 2 crores. So the financials aren't very good, to tell you the truth. Uh, if you look at the profit and loss statement, the company is a profit making company as of now, and it also gave its best year in March 2021, which it had a sales of around 54 crores and a net profit of 3.7. Is a profit making company. If you look at the balance sheet, the company also right now has reserves of 40 crores around, which is decent for the company its size, and the borrowing also is not very unsustainable. Now, if you look at the shareholding pattern, the promoters hold 61% stake in the company, and they diluted around 5%. So the promoters still holding more than 50% share in the company is a good sign, but uh, selling off 5% might be constructed as a negative in this case. One more interesting thing about this company is, if we look at the technicals of the company, this is the daily chart of the company. As you can see, it touched its high around 19 rupees in April 21, and then it has been on a steady decline. But recently there has been a great spurt in volume. On 6th September, recently, it saw a 20% rise in its price, accompanied by great volume. So also there is a lot happening behind the scenes in the company. Now the third and the final penny stock is Alok Industries, a very well-known company, a company with a troubled financial history owing to its aggressive expansion policy in the past. The company is a textile company with presence in cotton and polyester segment. The company is engaged in the manufacturing of textile, including mending and packing activities, leather and other apparel products. Now, this company actually, a few years back, expanded its footprints overseas and did quite well for a while. But soon, the level of debt that Alok Industries was carrying on its book came back to haunt it, and the company had to file for bankruptcy. And it was later picked up by a combination of Reliance and JM Financials. So they are holding around 75% in the company right now. So if you look at the financials of the company, as you can see, since September 2018, the company had a loss of around 1400 crores. So heavy losses, mainly on account of huge interest payment because of the debt borrowing that this company had. Then profit of 6,000 crore rupees. Then again loss. Then March 2020, 1,700 crore profit. And the current quarter, it had a net loss of around 100 crore rupees. So this has been a roller coaster of a company. If somebody was invested in this company, it had its up and down. And if you look at the yearly trend of the company, so in 2009, 74 crore profit, and everything started to go wrong around this time. And then in March 2016, net loss of 4,300 crores, then 3,000 crore rupees loss, then the worst of the years this company had 18,000 crore, then a profit. So again, you can see it has been zigzagging its way out of profit and losses. If you look at the balance sheet, the company had healthy reserves initially in the year 2009. Then the reserves started to decline. And then you can see March 2018, it declined so much, 18,000 crores. So it had to finance its debt from the reserves that the company had. And right now, in March 2021, it had negative reserves, which is not a good thing. Borrowings also are on the higher side, 24,000 crore debt it is carrying, so still a lot of debt. Now the main point of interest in this company is the promoters. Right now, Reliance Industries holds 40% stake in this company, and JM Financial ARC, which is an asset reconstruction company, holds around 35% of the shares. Now, if you look at the fixed assets of the company, still it has a lot of assets, although it has diluted some assets, 6,000 crores. So, a big asset base plus uh, existing capacities, if leveraged properly by the expertise of Reliance Industries and JM Financial, then the turnaround of this company is on the cards. If you want to bet on a turnaround story, you might interest yourself with Alok Industries, which might prove to be a multi-bagger in the future. So these are the three penny stocks that can prove to be multi-baggers in the future. And if you like this video, please like, share, and subscribe. And until next time, keep reading and keep growing.